All right, in this video, we're going to be going over Bollinger Bands. And Bollinger Bands is one of the major indicators when it comes to trading. And Bollinger Bands is a technical analysis basically designed with a standard deviation from a simple moving average. So basically, the purpose of a Bollinger Band is to find the upper and lower limits of a trading range for people to be able to make their trades accordingly. So if we go in TradingView and just search Bollinger Bands, you can apply it to the chart. And what you're going to notice is that on the upper Bollinger Bands, the upper part, when price reaches the upper part, there's usually a move down after it. When price reaches the lower part or pierces it, there's a move up. And it does a really good job of sandwiching price within these points. So if you look at the Bollinger Bands, the main ways you can use them to trade is to trade for price reversal points in the market or price trading ranges in the market. One way you can use the Bollinger Band is that if you see price deeply pierce the Bollinger Band, then you know that price is going to get back within the Bollinger Band. So a lot of people, when they trade Bollinger Bands, when they see something like this, they know that price is going to be going down, and eventually it went down just like that. You see it here, price that breached the Bollinger Band here, and price that went down. Even on the lower part, price had breached the Bollinger Band here, wicked it, and it went up. So you can use the Bollinger Band to find these different points in the market, and from there be able to make your trades accordingly. A lot of times, with Bollinger Bands, you could also use the mean line, which is the moving average. And the mean line is always going to be the moving average of whatever number is in the parameters. So the default parameters is 20 for 20 period moving average. And the standard deviation is what creates the bands of that 20 period moving average. So a lot of times when the market is heavily trending, a second way you can look at Bollinger Bands is you can see when the market is heavily trending, you see that the 20 period becomes a form of support or resistance. And when price, trends comes back to it, a lot of times price is going to respect that 20 period moving average and continue in the trend. Same thing can be said on an uptrend. So you see how price had breached this 20 period moving average. And a lot of times you can see when price comes back to it, it usually respects it. So those are a couple ways you can use the Bollinger Bands to trade. One, you can look for piercing movements like this on the upper and lower bands. Two, when the market is trending, you can maybe find some commonalities with the 20 period moving average to catch some smaller moves or continuation moves in the trend direction. So this is basically a video on how to trade Bollinger Bands. Definitely, do your own research, back test your analysis before getting into any sort of market or trading outcome.